Welcome to TheoTRADE. This is Don Kaufman. It's Wednesday, December 11th, 2024. Just over 20 minutes to go to the cash close here with the S&Ps ripping up some 51 handles. But it's the NASDAQ that is just on fire. I mean, the NASDAQ's up to the tune of almost 2%. As I've been saying pretty continuously, it's just been all tech all the time. It's a tech world and you are just living in it. But what I really want to make mention of is take a look at the Dow, for example, here. All right. It's flat to slightly down on the trading session. A divergence grows in the market force. Let's actually explain that and much more here, of course, on this midweek update. So one of the things that's notable is a clear and concise move higher most of your tech stocks. You start looking around though at some of the usual suspects like, financials here, and it just feels like, look, there's just like nothing left to buy but tech. We could point out, all right, Walmart, it's got a little bit of a bid under it, but overall, the advanced decline line in here is a 50-50. Like, this is a move dramatically higher inside of the S&Ps, okay? Or I should say a move back higher in the S&Ps. The NASDAQ just on fire, but it's not being done on strength across the board. And one of the aspects that I was pointing out in this past weekend's update is, again, this just gaping divergence, and it continues to grow. Let me get into some specifics over here by looking at not just some individual stocks, but sectors themselves. So you look at stuff like Microsoft, okay, exploding to the upside. I mean, has it had a down day recently? Absolutely not. Microsoft facing very close to the upper edge of its expected move, and that is the option marketplace, okay, handicapping forward risk. I mean, just look at the move in here. Okay, stellar move week in and week out, hitting, if you will, the upper edge of an expected move now, effectively in 3 consecutive weeks, which is, again, okay, statistically, we're getting wild out there. Let's move on to Apple, okay? All right, why Apple? Well, the conversation piece here is you're looking at Apple and it's down on the day. Is that necessarily bearish? Absolutely not, because Apple has been 1, 2, 3, 4 weeks. Apple is down today, but it's down again to the upper edge of its expected move. And as I said a moment ago, the expected move, it's so critically important because there are literally billions of dollars traded in the option marketplace that are kind of handicapping forward risk in a product like Apple. And we're literally sitting on what the marketplace expected for the entire week, but we're sitting at that level on a Wednesday. Leaves a lot to the imagination for the remainder of the week. Taking a look at Amazon, very, very similar. And this is just Google's week. There's no question about it. The news on Google, okay, regarding quantum computing, it's almost like it sparked fury inside the entire tech sector once again. But at the same time, like, I don't mind saying, like, it just feels like there's nothing left to buy, okay, but big tech. And again, I'm sure that people are going to point out, well, but what about what else you got? And it's quite simply like you're going to point out some of the financials over here. The only thing that's really got to move higher, maybe Goldman Sachs. But Goldman Sachs has seen sell side activity the last 2 weeks. I mean, like, legit, what do you got? You're going to point out some individual, some random stocks over here. There's not much. Take a look at the watch lists out there. Take a look at your own watch list. Okay. Take a look at the advanced decline line. All right. Even the stocks that are up. Okay. What's up is unquestionably like Nvidia, 3.5%. Okay. It's been seeing some sell side activity lately, but it's kind of come back to life. Meta. Okay. Absolutely flying. Okay, Google, as I said a moment ago, I mean, this is it. This is your marketplace specifically today, up some 5%. That's not just carrying the NASDAQ, it's carrying the S&Ps as well. Nothing illuminates that better, though, than looking at the Dow, which, as I said, there's this gaping divergence. And now I want to get really, really specific. So the Dow, okay, how many days in a row has it been down? 1, 2, 3, 4, 5. Everybody on the street's going to start talking about this. right? Just trying to be ahead of the curve on this one. So, but it's not just the Dow. As I brought up on the weekend update, take a look around at other sectors. And I say other sectors. We start looking like, all right, XLK, which is what, right? That's technology. Technology you expect to be up. And ladies and gentlemen, it is up. Okay, retail. Now this retail though is heavily influenced, ironically, okay, by, all right, this is XRT, which is retail, heavily influenced by a couple of stocks that kind of do fall into technology. But then we start getting into, okay, a little bit more like esoteric, but this is the materials sector. It's been getting absolutely hammered. Here, okay, is again, this is actually consumer staples. Consumer staples, I can't say it's been getting hammered, but today it's down to the tune of almost what? 0.75%. We start to look at healthcare, it is getting hammered. There's no question about it. In fact, healthcare, I actually want to bring this up for a second. On a year-to-date basis, healthcare now is only up 2%. Okay, what a difference a couple of trading sessions makes. SMH over here. So here's another one. When you look at semiconductors, you think, wow, that thing should be exploding to the upside. It is, okay, and it is up 46%, but it's not, okay, the leader in the pack. It's not the leader in the clubhouse by any stretch of the imagination. We look here over at utilities getting hammered. XLI, which is industrials, getting absolutely annihilated, all right? Okay, now, granted, they're still up and up big on a year-to-date basis. I don't want to diminish some of the the progress that industrials have made, but this is a significant move now from the 144 handle, okay, to 138. Again, the last 2 to 3 weeks has not been kind to many of the sectors out there. Then we jump over to XHB. This is the home builders. The home builders, I want to bring this up on a year-to-date percentage, all right, was up 33%, okay, is now almost in a full-blown corrective territory. You got to keep your eye on the ball over here, okay? But when you're looking at this, you're like, yeah, it doesn't matter, okay? I'd agree. It doesn't matter, okay, until it does. Until you start seeing, okay, another area of this marketplace, okay, really in trouble. So there's a couple of aspects that I want to bring to your attention. You're starting to see, okay, pretty steep decline inside of the bond market. If this sell-off kind of continues in bonds, people are going to start getting nervous again about interest rates. Now, granted, the Fed's going to come out next week, okay, do their little dance, make a little love, cut 25 basis points. That's it. It's going to happen. They're going to cut 25 basis points, okay? But that's not necessarily going to impede upon the sell side activity of the ZB. Got to be honest. This has actually caught me rather off guard. I would have thought that the bonds would have actually continued to see a bid underneath them. In fact, I've got a trade on that's the opposing side of this, but I'm watching it really carefully because at some point, I get it, man. Tech is flying right now. Who doesn't? Like you can see tech is absolutely flying, but I'm definitely, okay, looking at these interest rates and thinking to myself like, yeah, with the 10-year, all of a sudden has a bid back under it, okay, facing into 4.3%. We're a hop, skip, and a jump away from the market starting to feel the fear. 4.4 or 4.5%, the market starts to feel the fear and starts to hit those, and hit, I should say, some of the tech stocks. Now, what else you actually got? What else do I have? Okay, you have the dollar back in the bid. The dollar's actually back in the bid. And this is actually just a continuation, okay, movement to the upside. And the last portion of this puzzle that is really, okay, kind of wild right now. And take a look at the VVIX, the volatility index. All of a sudden, there's hedging activity in this marketplace. Unequivocally, this is a move that you have to start to pay attention to because what you're seeing right now is that professional trade is reaching for hedges. So not only are we having a high skew, again, skew is also indicative of hedging activity. Now, any way you want to put it, okay, in any way you want to position it, a high skew indicates, okay, degree of hedging activity. VVIX climbing indicates hedging activity. It doesn't necessarily, okay, pertain that there's going to be a wicked or wild sell-off, but it definitely says the professional world, though, is looking at the marketplace, okay, the same way we are and going like, wow, this is getting ridiculous. There's nothing left to buy except a handful of tech stocks over there, okay? Is that going to basically fizzle out? And if it does, okay, what's this marketplace going to look like? So as I continue to say the last 2 weeks, you still have to be on your game. I don't care if it's December 11th and you're looking, at the goal line over there and it's the end of the year. It's almost the end of the year. You're not in the clubhouse yet. And you cannot forget that. You are simply not in the clubhouse yet. Now, something I do each, okay, and every time we do one of these update videos, you got to look at the SPX, okay, and this SPX expected move. So this week we're expecting about a $61 expected move. And it's kind of interesting and ironic over here. It's 61.81 to be specific as the expected move. We hit already the lower edge of the expected move. It's a hit. We hit it yesterday. We've bounced back up. The irony is I recognize that we're up, okay, 50 points today. But are you aware technically we're still down, okay, nominally or massively unchanged, if you will, on the week. So the SPX is basically flat on the week right now, okay, with still 2 full trading days. We got through the CPI number. And again, the CPI was kind of a dud. The CPI didn't spark this, right? This was a little bit of Google, okay, and some news. And again, we're still buying like Tesla, like it's going out of style over here. But overall, okay, again, coming into the latter portion of this week, we're dead in the center of where we start. I mean, basically, we're where we ended last week, right? So what can you expect into Thursday and Friday? A lot of volatility. Like the marketplace is clearly not done positioning prior to next week's FOMC announcement. And from where I sit right now, you have a full $60 plus of movement on either side of this with a ton of gamma risk. The biggest concern I have right now is that, as I said, it's all tech all the time until ultimately it's not. We're going to watch these rotations real carefully into the latter portion of this week because we did start to see sell side activity in the broader marketplace. Okay, but the divergence over here, it doesn't sit well with me right now. Okay, you have the Dow that's effectively down. Okay, the marketplace is not in a great and healthy place when you have literally 3 or 4 stocks holding it up, and it's not in a healthy place because all it takes, all right, is one little snap, if you will, inside of a Meta or a Google, and the entire marketplace spins around. That's probably one of the reasons why we're seeing, okay, the kind of hedging activity that we are. So with that, 10 minutes left inside of the trading session, things kind of mellowed out. The S&Ps are going to close the day, okay, up. But remember, on the week, we are, for the most part, massively unchanged. More volatility ahead in this marketplace. Doesn't matter that we're coming into the holidays. Expect good-sized market moves to hit us literally in the next 2 trading sessions. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.